a very big welcome here again at the $1 Insight. It has been a while, and I'm here together with Shan Taco. Welcome again. Thank you for joining me again on this beautiful day here in Kuala Lumpur, Malaysia. How are you?
Thank you, Taco. I am absolutely fantastic. And you're absolutely right. We are meeting after a very long time because you were traveling. I was traveling as well.
Yes.
So we eventually made it up this day.
Today we're making it up. Why? Well, for two reasons. One, we're getting a lot of requests, right? People are emailing us, sending us messages on LinkedIn. Hey, where's this $1 Insight? And second of all, there's a lot happening in the world, right?
Absolutely.
Today it's 4th of July, Independence Day in the United States.
Absolutely.
And at the same time, also kind of the cutoff period of this year.
Yeah.
We've been reading a lot into the Financial Times. We do a lot of research. I know that you pick up a lot of your information there. At the same time, we look back now to the first half of the year. Just a quick one, Shan. What have you seen happening so far on the first half year of 2025?
Taco, the first half of the year, the ructions in the market are of a magnitude not seen in a generation.
Yeah.
The way the markets are shaping up, investors are nervous.
Yes.
That is a fact. If you see on the ground information, investors are nervous and they are looking for those tangible assets to take long-term position in order to have peace of mind.
Yeah.
And we have seen, gold going up to 3,500 in April, then going down. Currencies like US dollar at the start of the year, if you recall, a lot of investors were saying US dollar will stay strong. Mm-hmm. And I'm a contrarian. I said no, US dollar will stay weaker this year. And as of today, when I speak, dollar is down 10.5% to be exact, year to date.
Wow.
And we have this chart that our team, social media team, is going to share with you during this video.
Yep.
So dollar is down, gold is up by 27%, silver is up 20%, pound sterling is up 11.3%, euro is up 12.5%. Everybody was saying euro is going to collapse, and I said no. US dollar is going to go down. The debasement of US dollar will happen, and then the other currency is going to appreciate. S&P 500 is up 5.9%. So overall, the markets are some asset classes are going up, some are down. We are dealing in real estate. Real estate market continues to be on the global investors' radar because it's tangible, it's real, and people feel more confident when they take position in real estate.
Yes.
So overall, the sentiments are H1 very volatile. H2 will remain volatile as well. But those smart investors who have got market intelligence report, they will stay ahead of the game.
Very good, very good. So volatile, I think that's kind of the key word that we kind of can see for this year, even forecasting for the second half of the year. Let's jump a little bit off what is affecting all of this, right? What do you see happening in the world that makes investors nervous? What makes the dollar depreciate in the way it's doing, 10.5%, if I hear correctly, and at the same time that different markets are tense. Let me put it that way, right? What is affecting all of this?
The word that you have used, tense, is absolutely spot on. Because investors are nervous, markets are tense, because you have a lot of non-financial events. You have geopolitical risk, you have uncertain policies coming from US, from Europe, from UK. So when you have non-financial events affecting the market, that makes markets very tense.
Yeah.
And investors nervous. So you don't really know how to navigate through these tempestuous times. So because we are not living in a normal era. These eras are, it happens like 20, 25, 30 years. And I still remember when I was studying at University of Chicago, one of my Nobel laureate professors, Robert Fogel, he encouraged me to read financial history. So what we are witnessing right now, IQI was the first one. November 2020, when COVID started, IQI was the first one which mentioned about stagflation is going to hit advanced economies. And it's all documented. Anybody can go. And I was talking to Hamid. I said, Hamid, just put it over there. Stagflation is going to hit advanced economies. Hamid said, Shan, are you sure? I said, yes. So what we are witnessing right now, we have oil shocks. We have non-financial events affecting the markets. Geopolitical risk. Geopolitical risk was there in 1970s as well. You have US dollar losing its value in 1970s. The same is happening right now. In 1973, US dollar lost 15% of its value in 1 year's time. And we have not even ended the year. The dollar has already lost 10.5% of its value.
Yes.
So I think if we see history and we make an analogy of 1970s and 2025, a lot of things are common. So you have oil shock, you have non-financial events like geopolitical risk, investors are nervous, markets are tense, and those sophisticated and smart investors who understand history and economics, they have always taken position in tangible assets.
Yes.
So I mean, we're talking about real estate, we're talking about gold and silver, oil and gas, arts, agriculture. You love coffee, you love rice, you love wheat, so do I. So all these factors, when you combine together, so tangible assets are back in the portfolio for many sophisticated and smart investors, and we are witnessing history again.
Very interesting, right? Because like I said, 1970 stagflation. It was a while ago that we talked about it. Many people that study economy wouldn't go that far, right? Because you always look at recovering markets, right, in a short period of time. But it looks like we are up for a trend where we don't see the end yet. Is that correct? We don't see when this is stopping. Dollar keeps depreciating, prices keep rising, inflation is still there. What could change, or is there something that you could see as that might put a stop to it, right? That is going to make things easier. Is it Mr. Trump that could shout something that makes it all better, or do you see anything else that is on the positive side for those markets?
Taco, to be honest, I'm not really sure
Yes.
what's going to happen tomorrow.
Yes.
Forget about tomorrow.
Yeah.
What will happen in the next 1 hour? Because situation is so volatile globally, so you can't really make a forecast or a prediction.
Yeah.
And prediction market is becoming very, very hot. So, how do you make the right call in these tempestuous times when you are not certain what will happen in markets ABC or in markets XYZ?
Yes.
But one thing is for sure, inflation will come back. You will have oil shock. You will have geopolitical risk. That is a non-financial event. You don't know where the geopolitical risk will happen. You will have food shortages. You will have supply chain concern. So when you have food shortages, what is the main reason why food shortages are happening globally? Because supply chain is misaligned with the market forces.
Yeah.
So when supply chain they are misaligned with market forces, you have food shortages.
Yeah.
So I think there will be oil shock, there will be food shortages, and I would not rule out the possibility that US dollar depreciating further. So debasement of US dollar will create a lot of hiccups in the market, but there are opportunities as well, like in every market.
Yes.
I'm bullish on equities, I'm bullish on commodities, I'm bullish on real estate, because investors who fathom history and economics, they have always taken position in real estate. Look at Dubai real estate. It has become the new global currency.
Yes.
Look at KL, look at Canada, Australia, Vietnam, Thailand. All these countries are booming. Bali, you have been in Europe, look at Greece. All these countries are booming, and they have made significant progress when it comes to real estate investment.
Fantastic, fantastic. So coming back to the tangible assets, right? That's basically the summary of where investors should look at, right? Either it's commodities itself or real estate, like you said, right? That kind of the bricks of the business.
Yes.
We touched just now on our famous gentleman. We always talk about the 3 T's, right? If you remember of earlier episodes, the 3 T's are Trump, tariffs, trade wars.
Absolutely.
A lot has happened again, right? There's a lot of countries negotiating with the United States at the moment on these tariff points that were introduced by Mr. Trump's administration. The US, what I read this morning is they passed on their beautiful big bill in the US, but at the same time the dollar is still depreciating. Does it all make sense what is happening on a global level? Is Mr. Trump going towards a direction that is actually helping global economics, or is it really making America great again and I don't care about the rest of the world?
The point or the main discourse happening globally, that global economy is under stress. And the stress is you have the geopolitical risk.
Yes.
The stress is you have trade war. The stress is the fiscal side of the US is getting deteriorated.
Yes.
The debt levels are going high.
Yes.
US dollar is under pressure because Trump is putting a lot of pressure on Fed. Fed is not cutting rates. He thought Fed would cut rates by May, but now we are already in July. And the banks are now expecting that there will be 2 rate cuts. Previously, the bank at the start of the year, they said 3 or 4 rate cuts. Yeah. But the banks are now expecting there will be 2 rate cuts. And some banks like Bank of America and Morgan Stanley, they're talking there will be no rate cuts. So these quarrels happening in front of everyone, like President and the Fed chair, the central bank chief, they're fighting over the interest rate outlook. It is bad for the global economy.
Yes.
So I think this should be resolved amicably instead of coming out in open, it sends a bad signal to the market. Yes. So the global economy will remain under stress, to answer your question.
Yes, very good. Also, you shared recently, there's always a weekly commentary of BlackRock, right? Which comes up with kind of some points of what is happening on a weekly basis. Anything interesting to mention from there? What do they see for the current markets?
BlackRock is bullish on equities, and rightly so, because US dollar will continue to depreciate. So once US dollar depreciates, equity markets will go up. And we have seen that in the last 2 days, equity markets are on the upsurge.
Interesting. So, since for everybody here, listening here at $1 Insight, I'm sure, Shan, a lot of people are texting you, messaging you every single day, yes. Asking you, like, what is happening? What should I go into? I see as a summary tangible assets, but one more thing. Let's look at the different continents. We are here sitting in Asia, beautiful KL. Europe is very much under pressure. They just had their big NATO conference in Den Haag in the Netherlands, where I think 35 countries came together to speak with each other about increasing defense spending, right, yeah. Up to 5% of their GDP, which they agreed on, yeah. To protect themselves from Russia. So there's a lot of geopolitical things going on. And then you have the continents that seem to just carry on, right? Move on, like here in Asia, right? Just, doing business. Is it that all of this, what is happening around the world, does Asia seem to be kind of like the winner of all of this, right? Because I see that the growth of all these countries, if you talk Malaysia, if you talk about Philippines, if you talk about even Vietnam, Thailand, and Indonesia, I saw even still plus 5% growth for this year. What's happening? Why are they still seeing such significant growth in Asia?
Simple. The pivot of growth has moved towards Asia. As you mentioned, growth is happening. You have the demographics. Indonesia, 280 million people. Malaysia, 34 million people. Vietnam, Philippines, over 100 million people. It's all about demographic. Yeah. It's all about growth. It's all about consumption. It's all about investment. So wherever you have growth, macroeconomic stability, investment, consumption, demographics, these countries will stay relevant. So the growth will continue to happen in Asia, and we will see significantly that Asia will lead the global economy.
Fantastic. Well, Shan, thank you again so much for your time. It's always a pleasure to sit down with you and talk about all of these things. We always know that we want to actually continue talking for a few hours, but that's just all the time that we have for today. Yeah. Thank you for joining in here again with for $1 Insights. Yeah. And we hope to see you again soon. If you have any questions, please send them in to us. Leave a comment and we will pick up your question and use it again for the next episode. But for now, thank you for joining us today, and we hope to see you again next time. Bye-bye.
Bye-bye.